So good morning, everybody. This is Dennis Woolman with the Active Trend Traders for the How to Make Money Trading Stocks webinar for the 26th of June, 2015. It's kind of funny. Both Mike and I have been chatting here lately, and we're talking about how reminiscent what we got going on right now in the market is of back in 1999 and 2000. I'm not going to say that that's going to be the exact thing that takes place as we saw back then, but it is kind of interesting to look at that. Mike's not joining us today. He is still working on his house, but we'll get going here. All the materials that we present here are for training purposes only. Traders should always paper trade any new method prior to the risk of your own personal capital. I am a big proponent of paper trading. That's one of the reasons why I like the Thinkorswim platform, because it allows you to both set up your live account with your capital, but also run test accounts with the with a paper trade account, which I find very a great way to test out various types of systems and all that kind of stuff. Last week, this past Wednesday night, we had a good market neutral wealth building and cash flow strategy. We went back over that. If you're an options trader, this is a great option to trade options and just build up both wealth and cash flow over a long period of time using some leaps and then selling weekly options against those leap positions in the indexed ETFs. I am a big proponent. I love to get emails from our members of the Active Trend Trading that basically share how they are adopting and putting into practice what they have been learning over during these training sessions, and how that for many, the first time ever, they've been profitable in their trades. They have now a good solid system to follow. Next week, we're going to be talking about just a simple option review. Give you a highlight on that. And then the month of July, we're going to go into a series of sessions, how to use candlesticks to improve both entries and exits. Many people know about candlesticks and think they know about candlesticks, but oftentimes they're not using them properly, or they're not calling them the right things. They're not using the right terminology. And candlesticks can greatly improve both entries and exits, and we'll be going over that in a 4-week, it's probably going to be either 4 to 5 week session. And we're going to take our time, go through each of the 7 signals, the primary candlestick signals, and then a couple of other nuances in the candlesticks and some of the other items we utilize for improving entries and exits. Remind everybody that it's coming up here quickly, a little bit about 3 weeks away. I'll be presenting on wealth building and income generating strategies at the Money Show in San Francisco. So if you're available, I will be presenting on the 17th at about 8 o'clock in the morning. And so if you're in the Bay Area, stop in and see me and see what's cooking. It'll be about a 30-minute presentation. So let's get taking a look at what's going on this week in the market. This week, we're still in the market, the indices are still in a range. The S&P bounced off resistance, as we saw earlier in the week. NASDAQ bounced off resistance, as we saw earlier in the week. And if I was to throw in the composite, what the composite did is it went up and made a new high, and then has been now turned back around and has fallen back into its previous trading range. The Russell, the question I have on the Russell is, has it or is it defining a new trading range from about 1270 up to 1285, 1290, and we'll see the charts here shortly. Outside influences that influences both this week and will be carried on into next week. There's growing discussion here lately about this one item right here. It's called investors' complacency. I don't know exactly how they measure that, other than When the market has bad news, it's been tending to go up lately. So there's clearly a bullish bias, but it's almost as if nobody can do anything that's discouraging the investors from jumping on board. And the bull market's been going on for, depending on when you start it, somewhere between 6.5 to 7+ years. And so at some point, it's going to get long in the tooth. And we may be seeing that right now. Greece, of course, anything we mentioned with Greece typically gets a reaction in the market. And then interest rates are still, read an interesting article this past week about interest rates that the Fed is looking at a strong case for, or at least a necessity to raise rates in September. And we'll see as we get closer to September if that in fact takes place, and watch the volatility in the market as we do in fact get closer to that September time frame. Read a very interesting, good article by Lance Roberts, and it's got some really interesting slides, but he says, the interest rates are a function of strong economic growth, which continues to elude policymakers in Washington. Despite annual hopes of a stronger economic growth, it is yet to materialize as consumers, that's us, which make up 2/3 of that growth, remain hamstrung by somewhat stagnant wage growth, and we're being consumed by spiraling health care costs. Saw another chart, I won't show it today, but the level of healthcare cost that has gone up across the United States is just amazing, and it's basically taking monies away from consumers where they can't spend it on the other things that will grow the economy, because just spending just on primarily on healthcare is not an economy grower. At least that's the point that Mr. Roberts was making. So here's where we were last week. On the percentage of stocks above the 20-day moving average, we had popped up just a little bit, appeared to have broken this downtrending line, and then we basically this week stalled right here. And you'll see that with today's chart. So if we connect these highs down along here, as you can see, we popped up above that. It did a Pinocchio, stuck its nose above the line, and has now fallen back below it. This was a snapshot of about 10 o'clock, actually about 9 o'clock this morning. And it looks as if, again, we're back into a situation where the market, the market's still holding up fairly well, but it's holding up based on fewer and fewer stocks participating in the current market action. I'll probably do in the traders report and the art and science of active trend trading this week, and I'm going to throw up the chart that's also going to show how the stocks are doing around their 150-day moving average, and that can be sometimes really enlightening. A significant number of stocks in the NYSE are actually below their 150-day moving average. And oftentimes that 100, 150, 200-day moving average is what they utilize to depict whether or not we are in an uptrend or a downtrend. And so the internals on the market are in a downtrend while the market maintains and continues with its upward bias. So let's see what we have going on here. Here's another chart. Came from the same article that was written by Mr. Roberts. And I just want to highlight to folks, where are we at? Mike and I have been talking, and we don't want to sound like a broken record, but, this is a long time to be into a bull market. And one of the things that Mr. Roberts was highlighting was these flattening tops that happen almost in many of the market where it does go into a pullback. And so what we've been seeing here lately is, and we've been talking about this throughout the year, we're seeing this level of resistance. And so with the market still being quite oversold, and we know it's overvalued, Are we seeing this topping type action? This was back in 2007, 2008 timeframe before we went into a major correction. And again, it looks as if the markets, they're at least they appear to be primed where a more significant correction than just the 5 to 10% that we've seen throughout this whole episode going up, that we may be primed for that. It hasn't happened yet, but we will keep our eye on it. If we continue to hammer our heads up here, and this is on the S&P, we continue to hammer our heads up here at this resistance level, eventually it will basically break below this moving average here, which is a 35-day moving average. I think it's a day or a weekly moving average, and it'll eventually hammer that back down, and it will fall. How far might it fall? Again, once it gets in a position where we're repeatedly hitting those highs, I'll start measuring down 10%, 20, 15%, 20% to get an idea of approximately how far the market could fall. Another good way to estimate that is you can go back down here to these swing highs, or even the swing lows, or even the swing low back here in 2009, when some say that the bull market started, and you can put in a Fibonacci's from here up to here, and it give you some idea of how many what percent retracement where we go. Or you can go to the most recent move, and if you want to come to this point here, because that's where we did get a little bit of a sell-off, you can range this move from here up to here to get an idea of how far a 20% pullback, a 30%, 50, 60% pullback according to the Fibonacci's. But just a chart to be aware of. It's nothing to take action on yet, but just to be aware of. So let's see what we got going. So as of 9 o'clock this morning, the Dow was down from where it was last week. And so it's shooting about an 0.88% return so far through the year, 2.23 on the S&P, 6.2 on the NASDAQ, and a 3.6. And as we can see, this is slightly down from how the markets were doing year to date when we took the snapshot last week. So let's take a look at the markets and see how they are in fact doing. There we go. Okay. I'll start drawing in some lines here. This level up here that we were talking about, and that's where they're talking about the flattening of the market. And for the past, for the first half of 2015, we have basically seen just a flattening where, yeah, we've driven up, but within a price range, and then hit the highs, and then we're bouncing back down. This is exactly what it looks like on the weekly chart. It looks like we are bouncing back down. Where might we go? Well, we also have this level of fairly good, well-defined support. And so it would not be surprising to see prices drop all the way back down to this level, just above the 2064 area, and then potentially ping pong in here until, it could ping pong in here until, all the way through September, with the potential of where the potential interest rate hike would be. Now, this is the longer term trend channel that's been in place for several years now. If we get back over here and it drops this and closes below it, that could be an inflection point where the market could say, hey, I've dropped this trend line now, it's time to go lower. And if enough people are watching that, that's exactly what could potentially happen. As we see over here on the daily chart, the TSI had gotten up to and is now rolled back over. Momentum also rolling back over. Where might we find some support? Well, we might find some support here at about 2089, or down here at 2073. That seems to be a range. This is the 100-day moving average, and this, of course, is where we found support previously. And one thing that, as we've seen over these past few weeks, we'd have several days of topping type action, as we saw over here. We get the drop, but then the reversal events happen fairly quickly. It gets down to a particular level of support where the where the buyers are going to come in. Buyers come in and push the price of the stocks high, push the price of the index is higher. NASDAQ, what are we looking at with the NASDAQ? NASDAQ is telling us that we hit the support and the resistance up here earlier in the week. Now we are rolling back over. Will the 50-day moving average hold? If it does not, then we're probably going to go down and visit the 100-day moving average. And same thing over here, as you can see. We've got a very well-defined trading range. And so the price actions can rattle around in that trading range for quite some time before it actually rolls over and drops even lower. Because right now, as we said, the markets have a upward bias, and we'll see if that continues. Now the Russell has been the strongest index for quite some time, especially on this last move up. It almost went hyperbolic as it was moving up from here up to here. It broke out of its trading range and then it busted out of the, made a new high for the year, similar to the NASDAQ composite. And now we're getting basically profit taking and a sell-off. And where will the sell-off go to? It may go all the way back down to this, 1270 level. That was one level of support I was talking about. But if we break the 20-day moving average here, then it may reach all the way back down here to the 50. And by the time this gets down here, the 50 will be sitting at right about 1260. As you noticed before, and we've highlighted before, oftentimes the Russell runs in approximately, somewhere between $8 and $15 worth of range. And what do we have over here on the weekly chart on the Russell? We've got the stochastics turning over. Okay, that's oftentimes an indication that we're either going to move into a sideways move or fall further. As you can see, the momentum on a weekly chart did not get very high, even though we were making a new high. It rolled up a little bit. And same thing here. We've got the negative divergence going on with the true strength indicator on the weekly chart. If we move down just a little bit further today with the Russell, it would be a dark cloud cover on the dark cloud candlestick reversal signal on last week's candle. And one thing to understand with that kind of a reversal signal is next week's prices can trade anywhere in this area because it was all considered a level of resistance then. And so that's that basically is what's going on there. And so let's see if I've forgotten anything. I do not believe I have. Anybody got any questions on the market? What's going on? Okay, let's take a look at, let's finish up. So I want to remind everybody with the active trend trading system, our motto is to clarify, simplify, multiply. We help people understand what to trade. And we're based on 5 pillars: what to trade, top quality IBD stocks and index ETFs, and associated options that go with those. We define entry points, where to enter, where to exit, what strategies you use, and what to expect. Just this month, we have implemented the 3 different strategies to apply to the active trend trading system, and that is fully up and operational now. One of the things that strategy number 3, which is the wealth and income building, which I really like, is basically taking a long-term leap type option in the index ETFs and then selling weekly premium against it. As you know, as of today, we bought this S&P 2015 LEAP because I think that between now and January 2017 that the market is going to correct and go down. But at the same time, I want to be reducing my cost basis of this. And so far, we bought at 21 and we've collected, and this is 5 contracts, we've pulled in $1,923 in premium since 4/27. And we have reduced the cost of this option down to $17.15. That's this option up here. And Greg, I'll be right with you on that question. And here's where we sit with our total trades as the cumulative of everything. We're up to 50% on our win-loss ratio. Our target is 60%. And we always shoot for a return per year of about 40%. Got some ways to go through the second half of the year. This week, we basically issued I bought some YY today as it's pulling back to the 50-day moving average. And we've got a really tight stop on that in case the market just falls apart completely. Strategy number 3, we closed out a position for a $302 profit for the week. The early warning alerts, that is a separate service. We're about 5.28% on that year to date. So, Gregory, how come the NASDAQ is so much weaker than the other indices? I would say, let me go back to the chart of I would say that the NASDAQ is kind of the middle of the road one compared to the S&P, because the NASDAQ, and the reason I make that determination is, one, the NASDAQ is still holding at the 50, while the S&P is in fact, or was, tracking down to potentially test the 100. Yes, it is. It has already went below the 50. And so from a measurement of strength, since it is still above a higher degree moving average, or like the 50 rather than 100, I categorize that as having more strength. However, so it's my middle of the road on the tracking indices that we track. And the Russell, of course, it looks like it hasn't even gotten down to the 20-day moving average yet, and that's why this move here and this pullback here is the Russell has been the stronger. Which index is not weighted as much? That's the Russell, Tracy. Okay, here we go. Just want to remind me, if you're watching this webinar and would like to become a member of the Active Trend Traders or the Early Warning Alert folks, we have 2 services, and if you're watching this, we offer this at a discounted rate of 40% and a larger discount on the Early Warning Alerts, and those focus primarily just on taking triggers about 3 to 6 times a year on the index ETFs. So, okay, folks, we'll see you next week. Have a great weekend. Keep your egg growing. And now I'm ready to look at some stocks. Got a couple of questions here. YY is down now down 7%. I need to go look at that. Yeah, the stop on YY, Michael, is down at 68.25. And we entered that, I entered that at about 69.50. So I'm going to give it a little room to breathe. Would you say that the Russell gives a more accurate picture of what is happening? You know, that's a great question, Tracy. The Russell, what I think it does for us is it gives us a we know it's not being held up by one heavily weighted stock like an Apple, or, we had shown this. Let me see if I can find one. one item here. Let me go back here. There we go. This is NASDAQ. This is weighted in NASDAQ. As you can see, Apple, 11%, Microsoft, 8%, and as you can see, a very large percentage of these of the NASDAQ is weighted in these top 10 stocks. And then it goes down from there. But if these stocks are just holding their own, this market is going to hold up. However, once these big ones start letting go, that's when the NASDAQ and the S&P. S&P is weighted, but a little bit differently than the NASDAQ. One is based on capitalization, and the other is just is based on it's capitalization, and the exact word doesn't hit my mind right now. So let's take a look at some stock. A lot of things are going down today. Yes, they are, David. We're going to see if, what I think today will do for us will help define some levels of support where we may get some bounces off next week. And let me open this up. Okay, Taser. And so, yeah, here's YY. YY is still holding right there at the 50. It may bust down and drop below this level here. And if it gets taken out, we would look to, what's it going to do when it gets down to the 100. But we'll put in the, the short, really, tight protection because it is falling. Taser. Okay. Given the market appears to be selling off a little bit today, Taser is actually holding up fairly well. You can basically take a trend line, draw it across here. Maybe you can draw it across here. And if we break back above this, where's Taser probably ready to go? So we're going to probably run at least back up to 36 again. It may continue to meander down. Because we do have the momentum kind of dropping below the zero line, which, and if it meanders down the way it did over here, it can go on for 2+ weeks while it's sliding down. And but we at least have an initial flag line in place, and it's reworking it in that. It tried, and right here, it tried to break out. Volume on this pullback is really nice and low, so something to keep your eye on. I'd like to see it back where it was bouncing more off the 50, but it may not make that. ADPT. Okay, it looks like it's continuing to push higher. It'll probably run into resistance about the $100 level. It has been in a It's a little bit light on the volume per the stocks that I like to trade, because I like to trade just stocks that are around, no less than about 500,000 shares per day. And I'd have to run the stock checkup on the IBD website to see what kind of fundamentals this has. But we saw a tick up in a lot of the health-related stocks when after the Supreme Court made its ruling on Obamacare yesterday, saying that leaving it basically untouched and intact. And so we had several healthcare stocks that ran up from there. THC, Tenet Healthcare, as you can see, the decision came out and away she went. Taking a harder look on Tenet. Tenet got a really nice breakout or bust up. About 11 million shares were picked up. What we would do is, with this large move up, if it appears as if healthcare is going to continue in favor, we'd be looking for some kind of a retest or a reset to kind of pull back, wait for the moving average to catch up, and then try to take a trade off the moving averages. As we can see, we have hit short-term resistance at about 58. and the upper target on this huge, and you can see a little bit of a inverted head and shoulders going on here, and it will probably reach all the way back up to the $63 level. Let's see, VDSI. Okay, as it stands right now, VDSI is getting a really nice pullback, nice sell-off. Notice that this is in higher volume. It had one heck of a run from, once it got back up above the 100-day moving average, came up, spiked down, pulled back, did this nice little flag here, and then did a really, really awesome run. It is pulling back into its breakout area, and so what we'll be looking for is for it basically to stop its descent somewhere in this range. It may drop a little bit lower, and then wait for it to put in the type of candles, reversal candles, for it to continue on its move up. If we take the bottom of this range up to the top of this range, which is about $10, and add $10 to that range, which puts us up at about 40. That would be the measured objective for a trade on VDSI. But again, it is doing its pullback right now, and so we will see what transpires and see if it puts in any of the reversal candles in and around support at about $30. Okay. MU, darling of the hedge fund, crashing. Any thoughts? I don't know. Wow. Well, Michael, for right now, it's too late to short it. But that is kind of interesting that it's fallen out of bed like this. I have to check the news on what's going on with this. But the thing about it is look what's going on here, guys. We actually, it's been in a downtrend for several months now, going back to December of last year, and then finally we get this breakdown here. Now, Michael said it was a bad quarter. Okay, yeah, it's an earnings effect, bad quarter. But oftentimes that kind of a fall can be basically when the stock can rebound from that. What's the word? Didn't take my vitamin B12 this morning. But where it's just basically, it is just selling off so hard that it finally says, okay, I've sold off as much as I want to sell off. But let's take a look at here. In reality, that's got, definitely some ways to go. And where's it stopping at? It's stopping, well, here's a level of support where it might stop at based on this past level here. A capitulation drop is what we may be looking at. There's a couple of ways to trade this. I would not necessarily buy this for the dead cat bounce because this is pretty devastating down to the downside. I would look at, watch and see what it does, because it may pull back up in this area if you want to trade it, and then it would give you a short trade. But yeah, that's pretty interesting. Let's see. David makes a point that S&P 500 has more stocks than the NASDAQ 100. That is correct. But I think the composite has more than the S&P. ANET. And Michael, you mentioned on MU that it's got, fundamentally one of the best blue chips you can get nowadays. And that's one of the things that you have to be very careful with, the aspect of fundamentals, because fundamentally good stocks can still get hammered and drop from the sky, just like you saw MU did. And that's where I like to throw in. That's why I basically let, Enron's a good example. I let IBD take care of my fundamental analysis, and I look for the stocks that show up there that are fundamentally sound, and then all I have to do is worry about the technicals. ANET. Let's see, do we cover BDSI? We did cover ANET. We're doing for time. Let me catch up with the notes here. ANET, okay. ANET's made a really nice run as it came out of this cup. And this is almost just a straight cup without without much of a handle. It's now made its run up. It reached this high, and then as it's fallen back down, where is it going to stop? It's going to be searching for support. And we can go, if you're looking for levels of hidden support, you can go to the weekly charts and look where either the close or the open of the candlesticks are, not the wicks, but the bodies. And that can give you a clue on where things may find support and or resistance. And as we can see, the lower level here lines up fairly well with this lower level here, which is also some weekly highs. And so it may drop all the way down to here before it bounces again. But let's see what's going, we'll see what's going on. The weekly charts, this was a very strong up move here. The TSI has made new high on the stochastics and new high on the momentum. Again, we've highlighted this several times in the past. When this TSI tends to get up above or around 50, as you can see on the TSI on the daily chart, it got up well over 50. The 50 seems to be the extremes. Doesn't mean it can't go higher, but oftentimes it's starting to get, the up move is starting to get long in the tooth at that point in KTR. Again, this is kind of this breakaway as an exhaustion type move. As it moves up, it was well extended, as about 15 to 20% extended away from the 20-day moving average when it hit this high yesterday, and now is returning back down, reverting to the mean. Great breakout, and let's see if it maintains this somewhere between $11 and $14. One of the things that's quite interesting is that when a stock passes the approximately $10 mark is when some of the hedge funds start to get interested in the stock, and that's oftentimes they can start buying up shares if it's a good, if it's a good solid stock, and really drive the prices very rapidly from there. So just something to keep in the back of your mind. PIYC. Oops, no dot on the end. Okay, PIYC has turned back down. It now has put in a lower high. And is it going to be falling all the way back down into this area, the 34.36 level, and rebounding there? That's what I would be looking at, happening somewhere in this level, or maybe the 50-day moving average. Wait and see if it puts in a reversal signal there to move back up. Weekly chart, look what you got going on here. You've got a slight uptrend with a dark cloud currently. If it closes down a little bit, that would be a bearish engulfing pattern. So right now, if you're long the stock, well, you may want to be taking some profits off, or just protecting yourself, tightening up your stops. SLB, Schlumberger. Okay, Schlumberger, it's got earnings coming up on 7/16. When you're looking at these charts, where you've got a long-term, that's why I keep my weekly charts on one side and my daily on the other, is I'll go in here and see if I see any patterns. What do I see here? I can connect two highs, so I have a trend line. And so what we may see for Schlumberger is a continued pullback. Have we hit a level of support yet? A support zone, so probably between 85 and where it's at right now. So it may stop right here and bounce a little bit, Here's 85 over here. The candlesticks that it's putting in does make it look like it is looking to, you know, define an area to bounce from. But remember, we've got a downtrend going on. We've got earnings coming up, so we may get a bounce for earnings. But until this line here is busted, the stock continues in its downtrend. CBI. Chicago Bridge and Iron. Again, it too, let me get rid of that. There we go. It too has been in a downtrend. We can define there. But it broke out of it. This is, you know, one of those situations where it broke out of the downtrend. If I can get that to take, there we go. There we go. Broke out of the downtrend and now has reversed itself, coming down to make a potential higher low. And so we've got earnings coming up in, again, towards the end of July. And this may make a run, make a pre-earnings run. It's got a nice little flag going on here on the weekly chart, as we see, and then translate that over here to the daily chart. It is it trades about 1 million shares per day on an average. And so it may be looking to put in a nice little bottom here on the 50 and rebound up. I would say as long as it stays above, it's almost at a buy type position where you could buy, but your stop would be immediately below, like 25 to 50 cents below the low of today. Does that look good, Susan? Matter of fact, I'm going to write that one down to check out later this weekend when I'm doing my my assessment. So let's take a look at Trove. Okay. Yeah, I don't know anything about this stock, Gregory, other than, you know, it looks as if it may want to be coming down, back down and correcting. The weekly chart looks weak. And so, but the question is has it found its level of support? What's this particular stock? What does this company do? Oh. Okay. Lab analysis. Okay. So, I mean, it's down in a past support level, down here at approximately $9. And it, you know, if we get a turnaround year, yeah, it could climb back up to the 13 level. And they do trade on average about 600,000 shares per day. Again, I have to run this through the, okay, so they do cancer diagnostics. Looks kind of interesting. This may be one of those capitulation type sell-offs where it's sold off really hard, but look where it stops, right at the 100-day moving average. And it is in the process of putting together a spinning top at that moving average. And so that can be interpreted one of two ways. One, we're going to build a little flag here and then drop some more, or we're going to rebound, but it needs to it really needs to retake the 50. And this has been a fairly sharp drop with some, pretty above average selling. So sometimes on some of these kind of stocks, you see a lot of that kind of stuff because some of the insiders know stuff that they don't share with the rest of us. Isn't that a beautiful drop? Yeah, I'd be waiting on Method. I would be waiting on that for potential further drops, but it needs to work its way back up into some kind of pattern so we can, draw some trend lines for a break down to the downside. That too is an earnings related drop. And so I would go back and, take a look at the earnings report to see whether or not that was an overreaction or underreaction. because oftentimes if it is a good growth stocks, and this is, I think, have been on the IBD 50 list, oftentimes they do make a nice comeback. And with this particular stock, it's got a whole heck of a long ways. Here's the gap down window from about 42.57 down to, 31. So you're looking at a little bit over $10 on a $30 stock. It could work its way back up into here very easily. And just watch the, but as you can see, the sell-off really started. This was kind of the clue. This was a flag here. Or a flagpole, and then when the after earnings, it just fell out of the sky. Okay, any of the stocks reviews, guys, folks. I want to show you a couple of stocks that and why I've been keeping my eyes on Cyber. Very interesting stock. It has been doing really well over the last little bit, and it did break out, but now the breakout is failing. And here was a breakout level at about 60, somewhere between 70 and 68.30, $68, somewhere like that. Yes. You can fade a trade like this to say, I'm going to buy it at this level. And that's good, but what I like to do is I want to see it bouncing from that level, because, oftentimes as we see this happen with CyberArk, is that it hit that level and then it continued to fall. Now, where it's coming down to another likely level of support down here at about $65 or the 50-day moving average. And that's where I'll switch over to my intraday chart and say, am I getting a bounce? And that's what I was doing this morning as I was looking at YY. How is YY doing? I could have put in a trade saying, okay, just buy it at $70. But by the time I was getting ready to put that trade in, 70 had already been passed. So then what I said, okay, well, what's going to tell me that I'm bouncing? Because you don't want to be necessarily buying a falling knife. I said, well, what would be telling me that I was bouncing is, and I put in a stop limit order above where the current prices were. Therefore, the price had to have reversed and started back up. Now, I don't know if it finishes back above 70. I'll be very pleased for the day, and we don't know exactly whether it will or not. But it's one of those things. You can fade a trade and say I want to buy it at, like in this case, you can say I want to buy it at the 50-day moving average, which would have been 68.97. But if I would have just put in the order with that being my limit, that limit can be hit and it could run all down and rebounce here. And so that's why I put in the trade so that it reacts off of strength rather than if I'm buying it when it just gets down to that level, I'm buying on weakness. So Michael has a question on Apple. Yeah, it's kind of interesting. I mentioned in last night's report, the after-hour report market update, is that it was kind of funny that Carl Icahn came out, and Carl Icahn came out yesterday and did a couple of things. One, he talked about the overvaluation of the market, and how he had just made $2 billion trading Netflix, and so as you can saw, yesterday and today, Netflix is getting whacked a little bit, and plus Netflix split 7-for-1, in a week, a little bit over a week. And so basically, but then he started promoting Apple, saying I expect the same kind of stuff that I got from Netflix for Apple, but the thing that he didn't mention that he's been at Apple for quite some time from a much lower price, and so again, Mike and I chat about this morning. Is he trying to talk the price up so he can start exiting with his huge profit? I don't know. Okay, sorry for that divergence there, Michael. Sorry, what's question? If it holds the 125 line. If it holds the 125 line, what? Would I get into it? Now, as you can see, I have drawn in this triangle that Apple is working within. Right now it has closed and it's kind of having a challenging time getting back above the 50-day moving average. So we know it has support down here at about 126 down here to 125 where the 100-day moving average is. Would I take a trade in it right now? I mean, as long as it stays above this uptrending line here and it's looking like it might be bouncing a little bit, yeah, you could take a shot at it right here, and then you would want it. Oh, would I sell puts and get out if it fails here? Well, again, if I fail this line here, or if I retest up and back up in this area, I would be looking to sell my puts on the retest. Or if it drops this real hard and then comes back up to it, that's why I'd be looking at selling my puts. But yeah, isn't it interesting how Apple is looking a little bit like, oh, don't do that. Hold on. I'll show you one thing. There we go. Isn't that kind of interesting how it's looking kind of like a rounded top? And if Apple goes south, look at the other indices that will also probably turn around and head down significantly. And let's see, Susan wants to know about PANW, Palo Alto Networks. Okay, Palo Alto Networks right now, Susan, is into its pullback. And where might it stop? Basically, I'm looking here on the daily chart. Yeah, you got 172. How does that match up here? Yeah, 173. Again, you can go back to each one of these little highs. It broke out actually down here, and so I would basically wait for it. You got the moving averages. There's the 8-week moving average, approximately the same as the 50-day moving average. Slightly above that, but I'm just sitting there looking. You can probably go to the round numbers, like 175, 170, 165, 160 for a potential area where it might turn around. Another thing you can do is throw it on a fib from here up to there, and see it, and then magically that opens up some areas that I can see now. Yeah, it's got some support down here at about 169.54 that we see in these candlesticks here. Again, also at the 50%, where that we got that little candlestick right there, and then also down here at the 160. And you actually draw in this fib box, and you got the 50-day moving average. So we may get a pullback all the way to there. When we it's almost a little bit too steep to start basically this initial downturn here is a little bit too steep to draw a flag line on it, although you could, but the steeper the flag line, oftentimes the less reliable the potential signal. See, like this flag line over here, whoops. The initial part of it was quite steep. You get a bounce up, but then a failure. But then this second flag line connecting this high to this high provided us a much better signal to enter for the long term. FARI. I think FARI, I was taking a look at that this morning. I think it was a lot, looked a little bit, yeah. When I first took a look at this, and one of the things I really like about this whole moving average is once it turns pink and the price action starts respecting it, is you can just basically wait until you get a break back above it. And sometimes you get shaken out, but you get a reversal and it breaks back above it, for your entry. FARI right now looks as if it is going to be potentially testing all the way back down to the breakout area. And that's the other reason why I like to take the reversal signals. In other words, if I'm at a well-defined level of support, either defined by a moving average or a strong price level defined by past resistance / support, then that's where I will try to plan a trade around there for a bounce. Yeah, Michael makes a statement that in general, the premiums on, if you're looking at doing options on Apple, it is kind of interesting that the premiums on puts right now is actually higher than the premium on calls. Now, part of that has to do with the level of volatility that has been experienced here recently in the market. But yeah, you kind of go, what's going on here? Where you would expect something that was at the money, both the delta on the put and the call to be approximately 50, but that hasn't been the way it's been being. That's not the way it's been here recently. I want to throw up one other VIX. This last little dust off that has happened here is 623. So that was Tuesday of this week. And as we can see, what has the VIX been doing? It's been basically hitting down here at about 12 and then bouncing up to about 15 to 15 and a half. And so when it hit here on Tuesday, if you'll look at the S&P and all the other indices, this is where the markets rolled over and started to fall. And as we can see, the VIX has run back up almost to the top of the channel. And if it breaches 15 and gets back up to this moving average envelope, which is the moving average off of the 20-day moving average, that's where it's basically turned back around and bounced back up. So, and this has been going on here for, I'll let you go and check it out on the charts, but it's been going on for several months now as the market has basically just moved in its sideways trend. If your big chart's showing index downturns, July seems to be a bad month in several previous years. Yeah, July is usually a lackadaisical month pretty much, David. Well, folks, I'm going to wrap it up and call it a day. I have a great weekend, and we'll see you back next week. Be looking for the Art and Science of Active Trend Trading edition to be out this weekend. That's a free newsletter, and then the Traders Report that has all the picks for next week will be coming out to the premium members and the early warning alert members probably Saturday or Sunday. Have a great weekend, everybody.